Hey guys, today is Friday, July 26, 2019, and thank you for joining me. I've always tried to make an emphasis in all of the videos that I've provided in this channel that I am bringing the whole recordance of this experience to you, good, bad, and indifferent, so that you can see and learn from any of my experiences, whether those be successes or hardships. And I'm bringing one of the less impressive ones to you today. So I'm gonna have to eat my pride here a little bit, but nonetheless, I want to bring this up because this is an important and critical lesson that I'm glad I was able to identify this early on, and I hope that you take this and its full measure of significance and apply this to your same scenario. So today I was reviewing aspects of my financial plan, which we've already covered in great detail in previous episodes or videos of this channel, and I noticed a flaw that was pretty substantial in terms of its fiscal impact to my business. And that is here on my business expenses sheet, if you'll recall what this was, and in these areas I identify what the different rates are for tax or insurance purposes with the employees that I have. I was able to identify here in this line, my benefits package, that I was only calculating the total cost impact of carrying the my employer contributions to the benefits package of my employees for 1 month. I missed out on the whole rest of the year. You can see I've now corrected it, and just in year 2 alone, I have nearly $20,000 of expenses of employer contributions to my insurance or to my employees' health insurance premiums. This right here, if you look at the formula bar on Excel, this times 12 was non-existent. I had spent this whole time without a raise, and I was demonstrating a total cost of $1,625 in my second year just for the employee benefits, which is a gross misrepresentation of what that's going to cost me. So I've made the following adjustments to all the subsequent years as well, which spiked my year 3 from where it was to now $33,000 and so on and so forth. And so I was really glad, if nothing else, that I was able to identify this and make the corrections so I could at least measure and consider the impact that this was actually going to have on my business. So this is a little bit embarrassing for me that I forgot it, but man, am I glad that I caught it now and not on down the road, because subsequently I was also able to identify that with these additional costs, my pricing structure was not in alignment with my financial needs by year 3. And you'll have to forgive me, I've already made these adjustments since I've noticed it. I kind of definitely spent the time to go in and make the assessments that were necessary. But without that adjustment, when I was looking at my third year projection profit and loss statement, I was hemorrhaging money. I want to say at those rates with the added cost of my employer contributions to my employee benefits package, I only made like $2,000 best case scenario that year. It was very, very, very unhealthy financial activity that I was showing within that. So I had to make necessary adjustments in the only place that I can. If my cost of business is exceeding my revenue generation, I obviously have to make that up in my price point. So what I did is I went to my service detail, which is where I demonstrate the breakout of this. And if you're not familiar with this, by all means, please do go back and revisit the videos in which I covered in great detail and extent the financial information of my projections and planning. But I'm going to proceed under the assumption that you've followed and are familiar with the information of that video and jump right to this point. So in this, the service detail, right, we demonstrate the cost for each year to produce the actual billable man hour, because that's my metric. I'm selling a service, not a good, versus the sale point, and then from there we can determine what the gross profit is that's generated off of that. So by year 3, you can see in years 1 and 2, from the start and growth of my business, I'm selling my services at a unit price of $125 an hour. And by year 3, with the addition of my company's contributions, as we've discussed, to the insurance packages, and mind you, remember, probably the most significant impact by the third year is I am now going to be putting myself on the payroll. By the years 1 and 2, I'm not generating an income personally from any of these efforts, but by year 3 I am, which has a substantial impact on my tax and insurance implications associated with that, which is where the majority of that weight was born. I was free labor to myself before that, and now I'm not. So by year 3, I had to increase my price by 20%. I have to go from $125 an hour to $150 an hour just to even demonstrate financial growth and solvency in the 3rd year. And as time goes on, and as my work continues, and inevitably my cost of doing business and overhead and potential even additions to my staff employment continue to grow, those costs are going to continue to grow, and I have to maintain and keep up with that. So this was a little bit humbling, but a very, very, very worthwhile experience that I definitely wanted to bring you guys up to speed on. I'm far from perfect, and man, am I glad that I went through this review and this process and was able to identify making these corrections here, because it's going to be necessary to the survival and growth of my business that I was able to make this adjustment. So now I know, and I also have a part of a plan now for a resale price structure increase, that by the 3rd year I'm going to have to make some of those adjustments necessary for the survival of my business. So now that you've seen and I've brought you up to speed on at least my error and the fact I was able to identify and make adjustments in accordance with that, I hope that this makes it seem a little bit more relevant to your own experience, in case you've had some of the same, where you had something of an epiphany based on reviewing the data that you've collected in preparation of actually starting your own business. I've had my own today, and I am so very thankful that I was able to make this assessment on this side of the operation than actually being in the thick of that and then realizing that I wasn't making enough money to survive my business. Because now I can make the necessary adjustments before that becomes a really uncomfortable position. So I hope this was of some benefit to you, that you were able to witness my own mistakes and correction of that. And thank you for joining me today. As always, please do subscribe to this channel. We always bring more pertinent and useful information to you to help you prepare, launch, and operate your business. I would encourage any and all questions and feedback, add them to the posting of this video. And I really do want to thank you for your time. I hope that you enjoyed it, and stay tuned for the next video in this series. Thank you very much.